Fox Market Alert, the Dow and the S&P continuing to recover from back-to-back losses. Markets led higher right now by semiconductors and mega cap tech. We've got the Dow up 97 points, the S&P up 8 points, the Nasdaq up 30, and the Russell, which is the only one that was up yesterday, but only 2 points, is gaining another 5. All right. Pulling it off for the Nasdaq to get a record close, we must see a gain of 44.35 points. The reason I'm saying 0.35 points at the end of 44 is because earlier we were up 44 points. So we need it to be up more than 44.35. All right, the semiconductors, they continue to sizzle. Marvell and Micron are among the Nasdaq leaders at this hour, along with Tesla and, of course, CrowdStrike, DoorDash. But you've got Marvell up 3.6%, Micron up 2.25%. Now, with today's overall market moves, the Dow and S&P and Nasdaq are extending their gains for the month of March. And since the start of the year as well, lots of green here. So many Wall Street analysts are hiking their S&P targets. In fact, coming up, John Stoltzfus of Oppenheimer is our countdown closer. John has the highest call on the entire street, but not our floor show guest. He's saying, bubble anyone? He's Circle Squared Alternative Investment CEO Jeff Sica. What do you mean, bubble anyone?
Well, Liz, if you look at where the technology sector is, we went from the Magnificent Seven to the Fabulous Four. Pretty soon we'll be at the Terrific Two. The technology sector has become this massive force. And if you look at it, I like to compare technology to commodities. Mm-hmm. Right now, the technology sector is 8 times bigger than the commodity sector, so the commodity index. Mm-hmm. So you're talking about a massive force, but you're also looking at, they account for 30% of the upside in the S&P 500. Mm-hmm. I mean, I'm in a lot of these technology stocks, but it seems like what we're seeing is this continued momentum. And the last time technology was this overpriced related to commodities was the bubble in 2000, okay. And we know how that story.
And it was not pretty at all.
No.
It was a big bubble bursting, and it got all over everybody. Right. It was not good. However, Jeff, exactly what you're saying, I have heard most of it 8 to 10 months ago, and had I listened or our viewers listened and got nervous, they would have missed a big run-up.
Right, and that's the thing about bubbles. You don't know how long a bubble is going to inflate until it bursts. So I'm not telling everybody to run for cover. I'm still in a lot of these stocks, but what I'm saying is, number one, don't chase them. It doesn't make sense to chase them if you're already in them. And number two,
meaning don't add to your position.
Yeah, don't add to your positions. Number two, don't be afraid to hold some cash, and don't be afraid to look at other sectors. You know, people don't realize that there is a bigger world outside of these 7 stocks, or now 4 stocks and soon to be 2 stocks. Well, you could look at some of that.
Let me bring up Reddit. I mean, yeah. Reddit debuted last week, and it has been quite the juggernaut. It's up, I don't know, 49% or something like that since its debut. You're pointing to Reddit as a flashing signal of what?
I would love to start a company and lose money for 20 years, not make 1 penny, and then go public. My company will be worth $8 billion. I, as the CEO personally, will make $1 billion. That's what Reddit is. And Reddit, I go on Reddit. I like all the free talk on Reddit, on these social exchanges. And I understand why people do it. But if you're looking for a justification of my statement that we're in a bubble, it's Reddit. They have no business to continue to be at this price with the business they have.
Well, I'll tell you something, with the market charging ahead and the economy still looking pretty good, we got durable goods numbers for the month of February. And I always look at that one component, which is the core capital goods spending, because that's an indication of business spending. It way outpaced the expectation. Right. Durable goods were up, a couple of tenths of a percent better than expected overall, but the core capital goods gained 0.7%, beating the 0.1% estimate. Right. And I look at that and I say, well, there is no way the Fed is going to hike 3 times. Right. I mean, you had Raphael Bostic just yesterday of the Atlanta Fed saying 1 maybe.
Yeah, I mean, if you look at futures, that the futures are showing us that there is still optimism that the Fed is going to lower rates. I personally have a very hard time with that because the CPI has been very hot. The employment market has been very tight. So I don't see how they're going to justify it, but the markets are saying that they are. Now, this week, keep in mind, Liz, last week we had a blackout. The Fed couldn't speak. The speakers couldn't come out and make statements.
Now they're all talking.
Now they're all talking. So this week, if they come out and signal that there's going to be interest rate cuts, expect the market to focus on that.
Do not hold your breath, viewers. Not that I'm any fancy pants economist, but already, if Raphael Bostic is sort of the leader here, he's saying only one cut. We shall see. Jeff, it's good to see you.
Thanks.